Okay, so the next step we're doing here is the purchase of fruits for the week for the market, which is $1,000. So we're going to the expense. Now, because this is part of also making the juice, we're going to include it or add it on to the 3,000. So we have 1,000 added there, and the cash purchase of market items. And I'm going to take out the $1,000 that was spent, bringing the balance down to 6,700. The next item is the sale of juices and received $1,800 in cash. So that is actually income that the business received. So from week 1, they received 1,800 cash and nothing was outstanding on that. So we're just going to record cash balance. Sold juices and received 1,800. That means cash would have actually increased to 8,500. On to week 2. Here they hired an employee to help out during peak periods. Now that's not actually a transaction. So we're going to move on to the second part, which say they had a sign made to inform customers about the business, but they're not going to pay until next week, 500. So the fact that they had the sign made, that is what part of the expense of doing business. So we go under expenses and advertising expense for 500. And since it was not paid one time, it's still to be paid. We record it over there. Okay. And then that week, they also purchased some additional supplies of 350. So we're going back to the expenses, cost of items sold, and we're going to increase it by 350. And also we're going to show that cash went down by 350. Okay. Bringing this down to 8,150. Then they purchased fruits in the market for $1,000. So I'm going to quickly show that being added on here for 1,000. And also the payment under cash. Okay.